To go and kick off with just very briefly though, I want to get your thoughts on the broader market volatility we continue to see at the moment. Where do you see this evolving over the weeks ahead?
Well, I think, David, that depends on where the market focuses, or where the market fears is probably a better way to say it. So if investors are worried about inflation, if that is the biggest, if that's the top of the worry wall, they'll probably go into hard assets. The last place you want to be is in low-yielding bonds or cash, and commodities do very well. And that's obviously one of the reasons our market outperformed, and the Canadian market outperformed other stock markets around the world during that period. But on the other hand, we've seen a shift, particularly because the lockdowns in China, a shift from worried about inflation to worried about global growth, and a sudden stop in the global economy. And that's a bit of a game changer. And then that's why our market came off so much. That's why commodities topped out and started moving lower, or Aussie dollar started moving lower. So we could easily shift back to in worrying about inflation again quite soon. But while the market's worried that the central banks, particularly the Fed, is going to slam on the brakes really hard, at the same time, the growth trajectory in China is a little bit suspect at the moment because of the lockdowns they're having there. That brings it back to the growth side of things. So maybe we should be worried about stagflation. But anyway, the market seems to be going back and forth on that. So that will determine. And, there's some signs today that we had our inflation numbers today, that maybe the mood will go back towards worried more about inflation than slowing growth or a global recession, as you're hearing more and more about over the last few weeks. So that's why the charts are very important. It's very difficult to anticipate those mood changes and where the focus is going to be.
Yeah, get some guidance from the charts. You're right, there's fears here, there, and everywhere for the time being. And you provided a lovely little segue there talking about commodity prices and global growth. Aussie dollar, keenly linked to both of those. Let's have a look how the Aussie is setting up. I put the mocker on it a few weeks ago talking about it being undervalued, how wrong I was, like many other occasions. On the charts, what are we looking at? At what point do we think that this corrective episode may be over, or is there more to come?
Yes, okay. Well, we saw the Aussie move higher today. The calls for the rate hike by the RBA moved up to May. In fact, there's some big calls now that they may even have to do a jumbo hike in May after today's inflation numbers. But, it's difficult to say whether that's going to be a game changer for the Australian dollar. The Aussie dollar is trending lower. As you can see there, the 5, 10, and 20-day moving averages are aligned in a bearish formation, all pointing lower. And after we broke below the 61.8 Fibonacci retracement of the 2022 low high, and that came in at 72.32, the target really is a full retracement back to the year's low at 69.76. I'm not saying we're going to get there, but that is the target if you're looking at the Fibonacci. So if we break back above the 200-day moving average, that seemed to be when that waterfall of selling happened the other day. That comes in at around 72.90, we'll call it. If that breaks back, if we see a break back above there, that probably means there's a bottom in place, and the trend down is over for now. And that probably would coincide with the markets worried about inflation again, and a move back up in commodity prices as a result.